Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 398 on October the 25th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Denison Mines Corporation, Navitas Semiconductor Corporation, and SoFi Technologies. And we discussed three new trades on Sealsq Corporation, Lumen Technologies, and Intel Corporation. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on today's show, or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC at theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the equity markets finished the week higher. In fact, we've made new week-over-week highs once again. The Dow Jones Industrial Average jumped 1,016 points, closing at 47,207 points. The S&P 500 index gained 127 points, ending the week at 6,791 points. And now it's time for the topic of the week. The topic of the week is keeping it simple. That phrase has almost become cliche in our culture, yet people still struggle to keep things simple. There are 5-minute videos on how to boil eggs on YouTube right now. Who really needs a 5-minute tutorial on boiling an egg? We find ways to complicate all sorts of stuff. And when you're dealing with the topic as complicated as option trading, you really don't have to make it any more difficult. The goal is to keep it simple. Find a strategy that you like and stick with it. Yes, you can trade complicated strategies if you want. And honestly, if they're making you money, do it. For most of you, a simple strategy will be the best way for you to truly learn all of the benefits of trading options. I think the best strategy to start with is debit spreads. Learn how they work, learn how to price them, learn how to execute them. Most complex strategies are built on the concept of spreads anyway, so if you understand a basic spread, you'll be able to analyze nearly all of the strategies available simply by breaking them down to their most common spread components. Keep it simple. That's probably the best advice I can give anyone who wants to start trading options, and it's the best advice that was given to me way back when I got started. So that's it for the topic of the week. Let's go ahead and get into the review of last week's trades. We're going to start off with the covered call on Denison Mines Corporation, symbol D as in Delta, N as in November, N as in November. At the time, the stock was trading for $2.92 per share. I looked at buying that stock and selling the November 3 call at 35 cents, hoping for a return of 14.73% in 5 weeks. Well, shares of Denison Mines finished the week 10 cents lower at $2.82 per share. The call option we sold lost 5 cents, leaving us with a net loss of 5 cents if we were to close the trade out immediately. The call option that we sold is still the at-the-money call option, and the stock price is still 25 cents above our break-even point, which means if the option had expired yesterday, we still would have locked in a $25 profit in real terms. So even though the stock went down a little bit, this trade is still looking profitable. No adjustments are needed at this point. Next up, we have the credit spread on Navitas Semiconductor Corporation, symbol N as in November, V as in Victor, T as in Tango, S as in Sierra. At the time, the stock was trading for $14.66 per share. I looked at selling the November 14-13 put spread at 45 cents. That could give us a maximum possible loss of 55 cents per spread. Well, shares of Navitas Semiconductor fell 60 cents, ending the week at $14.06 per share. The out-of-the-money put spread that we sold is still out of the money, and the stock is 51 cents above our break-even point, which leads me away from making any adjustments at this point. If the stock were to fall below the break-even, I would look to sell a higher strike call spread to create an iron condor. At that point, you're just mitigating loss and trying to create as wide a price range of profit as possible. For now, this trade is working out too, so we just need to keep track of the stock over the next few weeks and be ready with a game plan to adjust this trade if needed. And our final trade on last week was a debit spread on SoFi Technologies, symbol S as in Sierra, O as in Oscar, F as in Foxtrot, I as in India. At the time, the stock was trading for $26.53 per share. I looked at buying the November 25-26 call spread for 61 cents. That could give us a maximum gain of 39 cents, or that's a 63.93% return in 5 weeks. Well, shares of SoFi jumped $2.49 per share, ending the week at $29.02 per share. The in-the-money call spread that we bought is now deep in the money. With stock prices well above our spread values, or our strike values really, this trade is definitely working out. Over the next few weeks, the trade will begin to increase in value to reflect the high likelihood it will finish in the money, assuming the stock price stays as high as it currently is. So for now, no adjustments are needed. This trade is working out even better than planned. So that's it for the trades from last week. I will acknowledge that I'm posting today's show a little bit later in the day because of a conflict I had yesterday evening, which is when I normally would research and record these shows. But it's coming out roughly midday on Saturday. Also wanted to give you guys a heads up that the next show, episode 399, will be posted either on Thursday night or early Friday morning because I'm tied up next weekend and I want to make sure the show gets out with timely data. So I'll be using end of day data, end of day pricing from Thursday, October the 30th. So that's next week. Let's go ahead and get into the new trades for today's show. All new trades today will use the November 21st expiration for monthly options in November, and all of those are just 3 weeks from expiration. We'll start off with our covered call. Looking at Sealsq Corporation, symbol L as in Lima, A as in Alpha, E as in Echo, S as in Sierra. The stock ended the week at $7.03 per share. I'm looking at buying stock and selling the November 7/2 call at 75 cents, hoping for a return of 17.35% in 3 weeks. Now you enter this trade by buying stock for $7.03 per share and selling the November 7/2 call at 75 cents. This trade makes the most money if stock prices finish above $7.50 per share, and the break-even price on this is $6.28 per share. In real terms, the stock purchase will require $703, and you'll collect $75 for selling the option. Next up, we have the credit spread on Lumen Technologies, symbol L as in Lima, U as in Uniform, M as in Mike, N as in November. The stock ended the week at $8.08 per share. I'm looking at selling the November 8 7/2 put spread at 20 cents. That could give us a maximum possible loss of 30 cents per spread. Now you enter this trade by selling the November 8 put at 78 cents and concurrently buying the November 7/2 put for 58 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $8 per share. The break-even price is $7.80 per share. In real terms, you'll receive $20 per spread that you sell and have $30 at risk. And then our final trade on the week is going to be a debit spread on Intel Corporation, symbol I as in India, N as in November, T as in Tango, C as in Charlie. The stock ended the week at $38.27 per share. I'm looking at buying the November 37/2, 38 call spread for 33 cents. That could give us a maximum gain of 17 cents or a 51.52% return in 3 weeks. Now you enter this trade by buying the November 37/2 call for $2.96 per share and concurrently selling the November 38 call for $2.63 per share. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $38 per share. The break-even price on this trade is $37.83 per share. In real terms, you'll pay $33 to enter the spread, and your maximum gain is $17 per spread. I always love those debit spreads because The idea of making $17 on $33 of risk in 3 weeks, I just love that. I've done it time and time and time again, but just seeing it on paper and actually doing it in my account makes me smile. I hope it makes you smile too. If it does, you're definitely listening to the right show. So that's it for this week's show. Thank you guys so much for tuning in and listening. I am working hard to deliver a really nice surprise on episode 400, which I just realized I'm going to be recording from a hotel room, most likely in California. I don't want to disclose my exact location, but nonetheless, I'm going to go ahead and get that show recorded when the time comes from wherever in the U.S. I am, and I'm looking forward to announcing what I've been working on, and I hope you guys enjoy it too. I'm looking forward to seeing you involved. So that's it for this week's show. Have a wonderful weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.